If you've ever tried to wrap your head around finance and economics, you already know the biggest headache, right? It's the sheer, overwhelming volume of misleading noise. I mean, there's just an endless supply of internet gurus trying to sell you their latest get-rich-quick scheme, plus totally contradictory headlines coming at you every single day. It's incredibly hard to know where to start or who to actually trust. So today, we're cutting through all of that. What we're going through right now in this explainer is a definitive 6-month masterclass. It's literally designed to give you a self-taught, college-equivalent education in finance sourced directly from the real-world experience of professional market practitioners. No fluff, just the exact roadmap you need.
Okay, let's dive into this, because this quote right here, it completely reframes how you need to approach this entire curriculum. Look, whether you're executing a rapid-fire stock buy, locking up capital in some illiquid long-term company project, or even if you're just deciding to sit on cash, you are always making a bet on a certain outcome. Every single action you take, and honestly, every single inaction, is fundamentally a trade. Once that clicks, you realize you absolutely need a structured framework to make sure those trades are actually rooted in reality, not just guesswork.
Here's the agenda for our journey. We've mapped this out as your personal syllabus, a logical level-up process so that this dense college-level education doesn't feel overwhelming. 1. Building the right mindset. 2. Mastering core fundamentals. 3. Global macro and geopolitics. And finally, 4. Putting it into practice.
Level 1. Building the right mindset. Fair warning. Before we do any math at all, you have to understand that trading is first and foremost a psychological battle against your own biases.
Now, what's really interesting about this slide is how it visually anchors your next 6 months. Before we even look at a single spreadsheet, we're starting right here at the foundation. Over your first few weeks, you're going to purely focus on understanding how the greatest minds in the profession actually approach their craft and how they manage the market's ultimate invisible force, uncertainty.
And that uncertainty, that is the textbook definition of risk. In finance, pretty much every single decision you make is essentially a volatility decision. The pros spend their entire careers doing one of 3 things: figuring out how to profit from that uncertainty, how to hedge it away, or how to plan around it. Understanding this and learning how to untangle pure random luck from actual repeatable skill, well, that's your ultimate defense mechanism against blowing up your portfolio.
To build that defense mechanism, you've got to study the greats. For market history and mindset, Jack Schwager's Market Wizard series is phenomenal for showing how legends tackle market inefficiencies. Then, Nassim Taleb's Fooled by Randomness will perfectly illustrate the difference between a real signal and just random variance. But perhaps the absolute most crucial is Dr. Alexander Elder. See, he's a clinical psychologist who actually quit his practice to become a full-time trader. Studying his work is hands down the best way to build a system that counteracts your absolute worst portfolio-destroying impulses.
Level 2. Mastering core fundamentals. Time to do the heavy lifting of undergraduate-level finance.
Once your mindset is bulletproof, we need to acquire an iceberg vocabulary, a solid surface-level understanding of everything going on in the financial world. The goal is to absorb the equivalent of the CFA Level 1 curriculum. But hey, let's bypass those 1,000-page textbooks. Just download summary notes, like Kaplan-Schwezer, to efficiently digest the mechanics. You need to grasp quantitative methods, basic accounting, corporate finance, bond math, and derivatives. And bluntly, unless you're trying to get hired by a big bank and actually need to pass a compliance check, just skip the ethics section. You're learning this for yourself, so save the time and focus entirely on the mechanics.
With the basics down, you need to learn strategic thinking. This means understanding how legendary investors approach finding value. You'll read Charlie Munger to really absorb that long-term value investing mindset. You'll read Howard Marks to understand how risk management extends into evaluating securities in the credit markets. And then you'll look at Joel Greenblatt for the bizarre stuff. We're talking special situations, corporate spin-offs, and mergers. The kind of situations that simply do not follow the normal fundamental rules of everyday investing.
But there is a darker side to fundamentals that you absolutely must master. You have to learn how to spot financial shenanigans. You literally need to look at the market through the deeply skeptical eyes of a short seller. Like, are companies' profits actually high quality and sustainable, or are they just playing accounting tricks? You have to learn exactly how companies misrepresent their books. That way, you can spot the dead companies walking way before they drag your hard-earned capital down with them.
Level 3. Global macro and geopolitics. Because while theoretical models assume all things are equal, the real world is incredibly messy.
Let's move to this next phase and see how this builds. You cannot invest in a vacuum. To predict the future of our messy, shifting global economy, you have to understand its past. By reading Lords of Finance, you see exactly how central banks navigated the death of the gold standard between the world wars. That history tells you what tools they might use in tomorrow's crises. And now Ferguson's The Ascent of Money? That shows you why financial products like stocks and bonds were even invented in the first place. Knowing why these instruments exist is like a cheat code for predicting how they'll behave when global conditions shift.
And when conditions do change, it's usually driven by geopolitics. Now, if you just watch media hype, geopolitics looks entirely unpredictable, right? It seems like world leaders can just do whatever they want. But Marco Popek's concept of geopolitical alpha completely flips this on its head. Instead of guessing, you identify the hard, geoeconomic constraints that actually narrow a world leader's choices. The news will tell you anything can happen, the constraints tell you exactly what few options actually remain on the table. And by extension, that tells you exactly which asset classes are going to be hit.
The final step of macro analysis is tactical application. Honestly, this is where the pros live. They aren't simply guessing which way the market is going, they are trading volatility dynamically. They're analyzing distressed debt from companies facing major restructuring. They're using historical roadmaps, the true anatomy of a bear market, to figure out exactly what phase of the cycle we're in, rather than just blindly reacting to whatever frightening headline dropped today.
Level 4. Putting it into practice. Welcome to the final boss stage. Time to step into the arena.
And this brilliantly illustrates the sharp dividing line between an amateur and a real practitioner. Paper trading, using fake money, is super fun. It gets your feet wet, it tests your theories, and it's great for learning the buttons. But because there are absolutely zero emotional ties, it is inherently limited. The transition to real money? Oh man, that brings out all those emotional hang-ups we warned you about back in level 1. It is a completely different psychological battle. Eventually, you have to put real skin in the game.
So here is your applied practice routine. First, you're going to act like a real analyst. Write out full equity research case studies, mapping out both the bull case and the bear case. Next, build a personal macro dashboard. I want you tracking interest rates, foreign exchange pairs, key stocks, and commodity prices every single day for a year. Follow the financial markets exactly like you would follow your favorite sports team. But instead of looking at box scores, you're looking at raw price action and SEC filings. Watch how certain headlines move assets and how others completely fail to move them. So the crucial point is this. If you actually dedicate the time, complete this grueling 6-month curriculum, and stick to the daily practice routine with real skin in the game, it absolutely pays off. You will emerge intellectually ahead of 95 to 99% of the people operating in finance today. No joke. You'll understand exactly why the successful pros study this stuff full-time, and more importantly, you'll have the framework to navigate it yourself.
Look, real wealth building goes so far beyond basic dollar-cost averaging into an index fund. There is this massive, complex, and deeply fascinating financial world operating behind the scenes right now, and the complete roadmap to master it is sitting right in front of you. The only question left is, are you ready to actually do the work, or are you just going to let the market keep taking your money?